check out shares of Nvidia and Applied Materials surging in the after-hour session. Let's get to Seema Mody back at headquarters with more. Seema.
Melissa, strong guidance from Applied Materials and also talk about stabilization in NAND pricing is enough to give a lift to shares, which are up about 6% in after hours. The company also said that the semiconductor industry, while 5 years ago smartphones drove the majority of semiconductor capital investments, that is quickly changing with AI, the big data era becoming new drivers. The company is betting on a pickup in growth in the back half of the year and a more favorable environment in 2020. Still, the company's CFO, Daniel Dern, reluctant to call this a bottom.
In Q2, Applied delivered solid financial results in a challenging environment. While we're still not ready to call the bottom of the semi-equipment cycle, I believe our industry thesis is very much intact. New demand drivers are taking shape.
Now, on the topic of China, when it comes to China domestic spending, the company says we're in a great position and expect we're going to maintain a very strong share position in China. Speaking of chips, Applied Materials not the only company reporting numbers. Nvidia also reported better than expected results. Shares are up by around 7% in extended trade, and that conference call is about to start. Melissa, for now, back to you.
All right, thank you very much, Seema Mody. Let's get the trade on this. Dan.
I think AMAT is pretty interesting, actually, because they actually make the equipment that makes chips, and I think that commentary seemed pretty good. This is a pretty cheap stock, trading about 11 times next year's earnings. Really good balance sheet here. So they sound cautiously optimistic. That's the sort of tone that you want to hear, especially when one of their big customers, like Intel, sounded so horrible over the last few weeks. So to me, AMAT seems one that was likely to have some legs here.
Yeah. Some of the concerns that we heard over the last couple of weeks, to your point, I was pretty worried about this going into both Nvidia and into AMAT. And actually, the very calm sound of what AMAT said, which was, hey, look, we're not calling a bottom, but things seem to be improving, and it looks like a better second half, and there's going to be some new areas of demand. Those are pretty positive things, Mel. And so because of that and the inexpensiveness of the stock in AMAT's case, I don't know how you wouldn't want to own some of these different names in here.
Yeah, I have to say, I mean, Nvidia, which looked like it was caught in this high multiple, downdraft of a lot of the semis, really delivering on terms of GPU revenue. The PC touring demand is there, very much there. And this is even without crypto, as we talked about yesterday on the show. That was a big reason the stock fell under pressure. But their core business is alive and well.
AMAT, you saw the margins hang in there, which I think is very important. 11.5 times forward earnings, to Dan and Pete's point, extraordinarily important. The fact that the third quarter guide wasn't that disaster, as a matter of fact, they sort of tweaked it higher, I think is really good. So at $44.50, being that this was a $63 stock in March or so, despite the fact that it's rallied significantly, I still think there's room to the upside.
I think the most important thing that happened in chips today was that the reaction to some of these names that have exposure to Huawei. You saw Xilinx down at 7% or something like that. That stock, your stock, has been killed off those highs. You made a great call back
now
at 89
mine. See, when it's wrong, it's mine.
It's yours.
I think it'll be really interesting to see if these stocks can bounce back with Nvidia and AMAT tomorrow, and if it was just a one-day blip.
All right, for more on of a breakdown into Nvidia earnings as well as AMAT, let's bring in Mitch Steves, equity research and semiconductors analyst at RBC Capital. Welcome back, Mitch. It's great to have you with us.
Yeah, thanks for having me.
Are you comfortable, or would you be comfortable at this point saying the worst is over for Nvidia?
I would say the worst is over probably the data center side. I think luckily this was in print. I think the expectations for gaming were too low. People expected units to be down again sequentially Q over Q, in addition to an ASP decrease when we know that last year peak cryptocurrency revenues were in January, and those are the lowest end SKUs. So I think we're coming off a bottom on the data center side. I was actually shocked, honestly, by the data center number. I thought it'd be a lot better than that. I thought it would be around 500 million. But the fact that AMAT is out saying that data centers are going to become a bigger portion, they're kind of giving you the wink, wink, nod, nod that data center demand will pick up. So that'll be good news for Nvidia in the back half.
AMAT's guidance in terms of, well, I want to say guidance, but what they said about not being willing to call the bottom right now of the semiconductor capital equipment cycle, it sounded almost like they see sort of the end in sight. They see the light at the end of the tunnel. How do you drive that with the other data points that we've seen so far from this sector?
Yeah, so it's interesting when you say, not calling a bottom. Is that a stock price concern number? Or is that a fundamentals number, right? So the fundamentals, I think, are going to bottom somewhere around Q3. That's been our call since the beginning of the year, but I think the stock already bottomed back in January. So essentially, if he's saying that it's going to bottom sometime at the end of the year, people are not going to do the math and try to time it out for an extra quarter, so they're probably going to work higher from here. I think the most important thing that actually came up in that call was the fact that he said 2020 is probably up, and so now your EPS number for 2020 becomes de-risked, assuming that Q4 comes in and is not down dramatically year over year.
Does the AMAT and what they said on the call, does that make you more bullish on certain other semiconductor stocks within your coverage universe?
Yeah, that makes me double down on the same bets we're starting at the beginning of the year. I'm doubling down on AMD. I think people still don't understand that from a technology perspective. They're going to gain a lot of share from Intel, in my opinion, because people have looked at performance per chip at all times, but really the key metric now is performance per watt. That's the entire reason why Nvidia saw their data center go up, because while the GPU uses a lot of power consumption, the reason why it's actually useful is because it does better calculations per watt. And so if you were to buy a high-end Intel server, your cost when you use the electricity, very similar to something like crypto mining, when you use the electricity, you're spending $45 million more on electricity when the total server cost was $10 million. So you could quite literally give it away for free. People are still going to choose AMD.
Hey, Mitch, quick question for you. Pete Najarian, Mellanox, the Mellanox Technologies, was that the right move? Did they overpay? How do you feel about that acquisition?
I feel like it was a little bit of a defensive move, but it wasn't a move that they did that damages the core business. Essentially, by getting Mellanox, they push Intel out of the way. I think the most telling thing was the fact that the slide deck Nvidia put out there was only 9 pages, right? So basically they said they came in, they topped Intel's bid, and in order to do that, they pushed them out of the data center even more. So they're going to highlight the fact that Intel's data center business is in decline, and that's probably why they did it. So I think it's a good acquisition. I don't think it's a game changer. Probably adds somewhere around 40 cents to EPS in 2020. But again, it's more of like an add-on versus a structural change to the business.
Mitch, synopsis into earnings, I think, on the 22nd. Interesting, 25 times forward earnings, huge move already. Do you stay with that name? It's one of your favorite picks, I believe.
Yeah, it's still our top pick. I think that people get kind of drawn into the whole AI, 5G, IoT, throw in every single buzzword you can. And what people don't realize is you can't make a single chip without Synopsys or Cadence. And so essentially with their guidance set up for something I think like 3-4% growth in the back half, I think that's going to be a lot higher. I think they can even grow double digits this year. So I think you're going to see numbers keep going up higher there. And people who want exposure to all those kind of buzzwords without the risk of having to choose the winner are going to start investing more and more money into Synopsys and Cadence.
Mitch, thanks. Good to see you. Mitch Steves of RBC Capital. Where do we stand? You're in Intel. You like Intel still?
I like Intel. And again, to me, Intel has found themselves very much in data center, very much in areas that I think are somewhat commoditized, but it's a diversified model. If you look at the SMH overall, again, this pullback from 120 down to roughly 107 is at an extreme to where I think the market is. The higher beta. This is all about trade war. This is all about the obvious choice, which is let's sell that's most connected to China.
Yeah, I would just say that the SMH ETF that tracks the semiconductor group, it's up about 2% as of today's close from those Monday lows. Let's see if Nvidia and AMAT can hold these gains in the aftermarket, and let's see if Xilinx and some of the names affected by the Huawei ban catch a bid. If they don't, then you know your answer to which way the semiconductors are going.